Tony? Anyone out there? Can you hear me? The volume okay? Cool. Um, I did that. I don't know. I see enough people in the room here who were at the. I know quite a few of you were at the webinar on Saturday, and it's funny because after the webinar, I actually spoke to a trader who struggles, and she told me that I told her, I said, she didn't make it to the webinar. I told her, I said, I have a trade for you. I want you to buy the bonds on Sunday night. It's my after the payroll play, and she jumped all over me. She's like, I don't trade bonds. It's like, okay, I'm sorry, I didn't even mean to go there. I'm trying to give you a trade. And she's like, well, the bond market is this and the bond market is that, and the bond, and I'm like, I understand what you're saying, but what I'm trying to say is, I've been watching the bond market for 30 years, and when the bond market has a big move after payrolls, and I write about this every weekend after payroll Friday, if we have a big move and the market closes either at the high or the low of the range, I feel that the move is capitulate in nature, shall we say, and it's a fade, and you look to fade it on Sunday night. And I see everyone in here should have my PowerPoints. So what I'm trying to say is I'm looking on Sunday night to buy the bonds, and I can see pre-market that the bonds are going to open up around 18, 19, 20. And I look at my points, and I've got one below the pivot is 18. And it's like, okay, well, I'm going to put my bid in at 18. And the market opens 18, 19, 18, 19, 18, 19, and it goes 18 offer, 19 bid. And I bought my 18s. And I messed around with them a little bit, sold some 23s, 24s, bought them back at 22, 21. But I traded within that position all night long. And my objective, my objective was 27. I wrote it in my commentary. I put it out in the webinar, and that was a trade. I signed up late last night. Sorry, Doris, I didn't see. Well, I'm glad that you were able to get into the room this morning. I didn't get I didn't get your email or anything. I know, Eve, I sent you stuff. Oh, Neil got you in. Huh? Okay. Doris, we'll chat after the webinar. Okay. Um, if you, I didn't get your PowerPoints either. Eve, I know I sent them. That's all right. They're in the if you click in the documents section, there's a folder 12, 10, 12 PDF. Those are the PowerPoints that we. So I'm sorry about that, but um, yeah, nothing I can do. I'm sorry. Anyhow, what am I trying to say? I lost my train of thought here. But I am trying to say is if you look at those PowerPoints, one so the low is one below the pivot, and there's a very high probability if we trade above the pivot, the pivot being 149.27, that we're going to trade to at least one above the pivot, but I usually think two above the pivot. And one above the pivot is 150.01. The high last night is 150.02. I mean, the this what I'm trying to say, and and let me I want to share it in the room. My son Santino, who's 21 years old, will start trading my money this week, and I really and I actually don't make him read my commentary, and he knows about the points, the PowerPoints, but Eve, that bothers me actually that you didn't get the points because Eve, did you get the commentary? This is Evelyn, I'm assuming. Evelyn, you know what you probably need to do? You probably need to go look in your, or maybe I messed up, Evelyn, and I'm really sorry. I got so many new signups after that webinar, but I'm almost. Did you check your spam? And I might have messed up, Evelyn. I truly might have messed up, and I'm sorry. If after this, I will get it sent out to you, and I'll throw in an extra week into your subscription or whatever. But anyhow, the point that I'm trying to make with this is I came across this formula for the PowerPoints in 1994, and I use them every day, and I use them as a guide every day. And I said to my son last night, I said, look at these points. There was a time, if you look at the overnight low in gold, and he's going to be trading gold, and he's going to strictly trade gold, and he's going to scalp one lots of gold. He's going to use the points, and he's going to use Dad's rules. And Dad's rules are: you don't turn a winning trade into a losing trade. You don't turn a winning day into a losing day. If you lose $500 in a day, you shut the machine off. If you're up $500 in a day and that's your target, but you think you want to trade a little bit more, we're going to use a 35% rule. 35% means 35% of 500 is 175. If the account goes from up 500 to up 175, then you're going to turn the machine off and call it a day. In this business, we have to have rules, and that is one of the things I'm going to bring into the TNT class in January. We are going to work on rules, trading rules. You do not by 10 o'clock in the morning make $1,000 and give it back by the end of the day. Those are addiction issues, and we're going to work on rules, because this game is all about making it and keeping it. And believe me, I traded for 20 plus years, making it and losing it, and I keep it these days. That's the objective, is keeping it. I gave it away way too much to not play this game. But the point I'm trying to make is I came across this formula for the PowerPoints in 1994, and I still use it to this day. And we had on Friday, the Treasury bond market had a 43 tick range. That's huge in the Treasury bonds, huge. And my PowerPoints nailed the high and the low. I mean, it's right there. The low is, I got a point at 149.18. That's the first one below the pivot, and I have a point at 150.01, and that's the first point above the pivot. I mean, that should get your attention. If you're not using the PowerPoints, you start using the PowerPoints. Last week, I do weekly PowerPoints as well. Last week, I had a weekly PowerPoint in the gold market at 1684 even. Friday's low was 1684.10. And another thing about these points is the second point above and the second point below tend to be better points. They tend to, they tend to work better. And if you look at your points, what's the second point? I think it's the second point. Hold on, I need to pull them up. Yeah. In the NASDAQ, what's the second point below the pivot? 26.25 quarter. What did they get down to last night? 26.25 and 3/4. I mean, it just happens over and over and over again. It's same thing in the S&Ps. 14.10 and 3/4 is the overnight low. 14.10.5 is the second point below the pivot. So what I'm trying to say is, do your homework. You have these levels for a reason. I've always learned in this business, the person with the best levels wins. And do your homework. I'm serious. Do your homework, and you will. And honestly, reading my commentary and going through these points and coming up with levels, and deciding if you're a long-term speculator or a short-term speculator. Doing your homework. Even if I'm a long-term bear, but you don't do overnight positions, you look to sell at points every day. So, all right, let's kind of get started. I needed to touch on the points because, one, I'm going to be teaching my son how to trade them, and two, I think they're important, especially, after a day like payrolls Friday, and then you look at the points and the bonds have nailed the high and the low. It happens time after time after time. So one thing I want to do today, and I want to bring it to your attention, because I did such an extensive webinar on Saturday, and I'm thinking almost the whole room was there. I want you to come up with questions today, and your own stuff, and we'll try to do more of a Q&A today more than anything else. But I mean, I could pull up a bond chart here. We got really nothing there. This 50-day moving average came in at 149.16. And we had the point at 18 last night. That gave me all the reason in the world that I wanted to buy the bonds. I mean, what are we doing here? Is this going to be? This is the Nasdaq. Is this? I mean, that Nasdaq surprised me today. It didn't surprise me. I thought I covered my shorts last night when we got below 30 even. That was at whatever I set an alarm and I thought we'd trade back up to the pivot today, which was 26.46 half, and I actually went short at 26.46 half, and I'm taking heat. So, but what can you do? That's the game I play. I take heat. I bought Apple puts the same and got stopped out. Where would you re-enter? I don't. Jim, I'm gonna share this with the room, and there's people that might totally disagree with me, but I don't trade put. The professionals, options traders. You feel the move of the market is lower. What kind of timing? Few days. Okay, Mike, man, whatever. Just I'll get back. I'll get to you. You and I, we talk every day. We can talk whenever. But what I want to talk about with options here is the professionals, the market makers. The market makers are the professionals. The true professionals, they do what they call sell volatility. Do you understand what I mean when I say sell volatility? Does everyone understand what I mean when I say sell volatility? I didn't read your question. Sorry, Madden. Yes. Okay, selling volatility means you're selling puts or you're selling calls or you're selling them both. And what I know about options, and I know a little bit about options, I don't trade them. I don't trade ETFs either. But what I know, I did trade ETFs and I quit trading them because I couldn't make any money on them because I didn't understand the product. And if you don't understand the product, you shouldn't be trading it. But what I know about options is there's 4 different things. If you buy a put, let's say you buy a call. There's 4 different things that can happen if you buy a call. The market could go down and you lose money. The market could go neither up nor down. The market could go sideways and you lose money. The market could go up, but it doesn't go up fast enough, so you lose money. The only way, if you buy a call, the only way you can make money is the market has to go up, and it has to go up in a hurry. So there's 4 different things that can happen when you buy a call, and 3 of them means you lose money. Why do you think the market makers sell volatility? Their odds are 3 out of 4. And who buys puts and calls? My father, who's a 81-year-old. He's been, ever since he retired from being a bricklayer, my father buys puts and calls because he's going for the home run. My father was a bricklayer who, in 1999, was worth close to $1 million, and he has blown half of that in the market in his retirement. My father is a gambler. He's not an alcoholic or like his I mean, I have some of his characteristics, but he wasn't an alcoholic, but he's an addict, and he can't stay away from the market. My father is dying of cancer at the moment, and he's still trading the market like a true addict does. He can't watch a football game without having a bet on it. He owned this stock IDCC for, I don't know, he bought it at 40, then he added on at 20, and the stock sat at $10 to $12 for like 5 years. And then it had a big move last year, and the stock traded up to like $82. And he's telling me, what do you think of that IDCC? I've owned it for like 10 years. It's up to $82. I said, Dad, just take your profits. Bloody hell, this is a get out of jail free card. Take your profits. He said, no, 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 no. I did some reading somewhere. It's supposed to go to 120. I just bought the 100 calls. I'm like, what? Wait a minute. You've been, yeah, and the stock traded back down to like 20. He blew another 50 grand going for the home run, trying to hit a home run. That's why I don't play puts and calls. If you owned an equity and headed south, would you just sell instead of, Mike Madden sent me a tape of a guy that he watches, and it's really, wow, hey, look at that yen falling out of bed. That's a beautiful thing, actually. I was taking heat on that. Sorry about that. Still taking heat on my short NASDAQ, but where was I going here? Mike Madden sent me a tape about a guy that he watches, and this guy started. He sold. What did he sell, Mike? He sold a call spread in Amazon, and what am I trying to say here? And he took off. So basically, what you want the market to do is go down. Well, the market actually went up, so he took off the short call and he kept the long call on. And what I've always heard is now you're legging out of a spread. And what I always heard is when you lift one leg on a spread, you end up tinkling on your other foot. So basically, how I can answer your question, Jim, when you're wrong, get out. Don't spread out of something. Don't have a futures position on and say, okay, well, this is wrong, so I'm gonna sell some, or I'm gonna buy some puts against it or something. If you're wrong, get out, move on. And Jim, I know you just signed up this weekend. What do I do to my long-term readers? And I fortunately have not been wrong lately. But when I'm wrong, what do? I write in my commentary, guys, I'm wrong. I'm sorry, I'm wrong. If I get it wrong quite a few days in a row, I call myself a few names in the commentary right in the first paragraph. Hey, let's get this out of the way early. I'm wrong. Let's move on. And when you're, I've got a long-term view here, so I can afford to take 10 handles of heat here in the Nasdaq. I had a long-term view in the Japanese yen. It took 125 points of heat in the Japanese yen, and now it's a 650-point winner. So that's my style of trading. Everyone else has their own style. You have to adapt to your style. But if you owned an equity and it headed south, would you just sell instead of put out? Yep, I would just. When you're wrong, get out. So anyhow, this could be on this Nasdaq. Me, I love when the Nasdaq leads, and I've got this sell signal. So I still think I'm right to be short, but this could be a right shoulder here, and if we get some sort of resolution on this fiscal cliff, which I don't think we're going to get, we could spike higher here. I don't like what I see. I don't like the whole idea about the capital gains tax is going to change in the year 2000. In the year 2013. And I think you are going to see selling in the next 2 to 3 weeks. And I think you're going to see profit taking, and people don't want to mess with that capital gains play, shall we say. This is historically a good month of the year. I don't think it's going to be this way. And everyone you talk to, everyone, all the analysts out there, they are like dead keen on next year being a bad year. But they're not talking about December being a bad month. They're talking about next year being a bad year. I think the rot starts now. And I have a position to back my opinion. So I was short the Nasdaq at 37 and a quarter. I covered them last night in the 28, 29 area, and now I sold them again at 46 half. So I've got a position on. I'm wrong, but I've got a position on that I feel will be right in the long run, and and I believe in my signals. I know a week ago, Friday, I received a sell signal in the gold market, and the gold market was up $10 the next day. Finished a week ago Monday up $6, and on Tuesday it was down $25. So I've got a game plan and I'm sticking to it. Let's throw up an Apple chart. I see Apple's up $3, so that's making a nice little comeback here today. Again, boom. Either this is going to be building a bottom here, or this is. Did you send out the weekly PowerPoints, or how do I find them? Oh no, Roger. I don't. I just do them for myself. But Roger, you took my TNT class, didn't you? Yes, I know you took the TNT class. Roger, if you yes, yeah, I mean, I'll send you the spreadsheet again, but these are the people who haven't taken the TNT class. I send out the spreadsheet with the formula embedded in the cells. And in the top part of that spreadsheet, Roger, if you just enter the weekly high, low, close, and yeah, well, if you can't find it, Roger, email me or call me, and I'll send it to you again. Um, but yeah, if in that top section, and then you can have weekly points. I for my son last night, I put out the weekly gold points for him, and like I said about the dailies, the second above and the second below are important points. For the weeklies, it's the same way. So anyhow, back to our Apple. You can see here's the sell signal. The market opened up like $11, $12 lower. It's like, ooh, I don't know. I don't know if I was going to get a chance to sell those 46 halves in the Nasdaq. But Apple came roaring back. Nasdaq traded up. It's actually traded through its pivot now. So we're keeping an eye on things. The nice thing is believe it or not, because I'm kind of short the yen. The yen is coming off for me. So what money I'm giving away, there I'm making back. I in my head, I always try to draw the picture out in my head. And when you wake up in the morning and the pound's up 50 and the yen's up 30, you're going, okay, well, at least I took some profits in my bonds, and I took some profits in the mini Nasdaq. So we'll say, and plus I'm long a little bit of cattle, and that's unchanged on the day now. I'm trying to sell that a little bit higher. So I'm not sure about today. Celeste, when you get a sell signal or buy signal, where's the general time frame to meet target? Uh, if I don't if I don't get stopped out or see a profit in 4 to 5 days time, I'll stop myself out. Normally, I mean, I like to see the profit the next day. If I don't see it the next day, then and it comes the day after, that's usually when, like in the gold sell signal. I'll put up that gold chart from last week. And sorry, there's going to be a bunch of. Oh no. Okay, cool. What page do I have up? See this little signal here? That was the sell signal in gold. This is 11:30. This is November 30th, and then you can see on the Monday the market actually on this day it closed at I think 1712.70, and on the Monday it traded as high as 1724.90. So I was taking $12 a heat here, and I had a couple on, so I actually had two on. So I was taking $2,400 a heat here. The market closed at 1721.10, so I was still losing $1,800, something like that overnight. The next day, thank you very much. I took profits this day, and I'm 100% sure on this day here, the pivot in the gold did not trade. And this is another thing. I go back to my points. The pivot did not trade. So because I know the pivot trades, and the pivot is basically the high plus the low plus the close divided by 3. And what I know is when the pivot does not trade, and this is and I know maybe there's some new people here that want to, see charts and see this and that. But these PowerPoints are so important to learn about them because they really are, so anyhow, on this day here, I knew the pivot didn't trade. So I'm already figuring out the pivot for the next day. And you all could do that ahead of time. And it's just the high plus the low plus the close divided by 3. So the pivot the next day was 1702.50, I do believe. So I took my profits. I mean, gold was down $25 this day. I took my profits at near the end of the day at, I don't know, 1697 or something like that. And I put in an offer to sell them at 1702.50. I actually put the offer in at 1702.40 because I wanted to be short. This next day, the market traded as high as 1708.30. So I'm short again, taking $6 a heat. Well, guess what? The market came off. The way I look at my trading system, Celeste, I look to take profits in a 24 to 48 hour time frame after the trade becomes good. So the trade became good here. I would normally take half profits and move my stop, but because I knew the pivot didn't trade, I took all my profits and tried to sell them again. I did sell them again and took them off on this day, and that's how I trade my points. And more, you see, I put out the system trades. People, if you don't understand the trade that I'm putting out, send me an email with your phone number, and we'll talk about it. So that was nice. So I'm hoping. I mean, I'm hoping. Hoping isn't trading. Hoping is hoping, but I'm hoping this. I mean this Nasdaq signal. We put a little inside range day here today, and we come off again tomorrow. I'm even hoping we come off today. I mean, I'm short. I don't want to take overnight heat. I want to see it come right to. 1 second. All right. Where else do we want to go? What do you guys want to see? What do you guys want to see? Google, there's that sell signal in Google. I mean, that's doing nothing. This could fall out of bed tomorrow. I put in the chat room below 682. These lows here, this is 682.40, and I think this low here is 682.30. Below 682, Google's had it. Absolutely had it. I see the bonds are coming off, but you know what? Who cares? We took our profits in the bonds. Did anyone here? Did anyone? I see Dave Barton's in here. Dave, did anyone buy the bonds last night? Did anyone believe in? Oh, I know Bill Barrett did. Hello, Billy. I know you did. Good job. Did you sell them at 27, the pivot? Took your profits? 24. Yeah, absolutely. Absolutely. A profit's a profit. Doesn't matter where you sell them at. Well done. I guess you're the only one. There's 28 people in the room and you're the only one, but that's all right. And Eve, I'm really sorry. I've got to check my emails. Eve, did you check your spam? Did you find anything in the spam? Yes. Well, no, we're not trading ZBZ anymore. We're trading ZBH. The ZBZ, yeah, we rolled out of those. So when it comes to the Treasury bonds and the Treasury notes, now trade ZBH. And I'm pretty sure on Thursday we roll out of all the E-mini S&Ps and NASDAQ and everything become March as well. So we'll be rolling those Wednesday night, Thursday morning. I did a 2-hour webinar on Saturday. So, I mean, for me to pull up a chart now, I'm just like, doing it again. So any questions? Throw questions at me. Anyone want to see a chart? Any? I mean, I could throw stocks up here. Anyone want to see anything? Oh, I know what I wanted to put up actually. Do you know how? Yeah, you know what? I forward that Gartman letter to my readers. I never read it. I never read it. So if my view is opposite of his, that's what makes a market, the bulls and the bears. I never read it. But he's been around a long time, and he's a very clever man. And he obviously has his mug on CNBC. You don't see me on CNBC, so he's obviously done a few things right in his career. So you know, um, okay. Do you remember last week? Eve, I just may have forgotten it. I'm sorry, and I will send that out today, but I'll also give you another free week. So we were talking about the rollover gaps. 30 years. These are those rollover gaps. Look at how the bonds came and filled that rollover gap finally on Thursday. So and the reason I'm putting this up, he has some interesting. Great. I put this up for a reason because the notes had that rollover gap as well right here, and they filled it a little bit before. They filled it the day before the bonds filled it. But look at this, and this is what will keep me bullish the bonds. This is the bond note spread. And the same thing is, here's the rollover gap in the bond note spread. They didn't fill the gap. Now, what that means is, that means that the bonds need to rally, or break, less than the notes. Usually it's going to be a rally. So I'm still looking for this spread. This low here is 116.31, and the spread right now is trading 116.07. So I'm looking for the bonds to rally 24 ticks more than the notes, possibly this week, possibly this month. Do you know Alan Farley? No, I don't. So because this spread hasn't filled it, they tried to fill the rollover gap. It was on this day here that the bonds filled their rollover gap, but this spread didn't fill it. So that's telling me that I'm still looking for this rollover gap to be filled, and so we'll see how it goes. I mean, I'm that's going to keep me bullish the bonds and the notes, and but for this gap to be filled, that means the bonds need to, like, in one day, close up 20 ticks and the notes close up 10 ticks. So then the spread will go from, the spread is actually trading 116.01. So the spread will go from 116.01 up to 116.11. And then why are gaps filled? Or is there no particular, it's just, and it's why I do they say gaps are there for a reason, and the gaps will get filled someday, and it's why I do my indice charts. I use pit session. I use 8:30 to 3:15 for a high-low close. And when we started coming off in 2008, I started looking at the chart, and I was going back to like 2006 and 2005, and I'd find a gap, and the gap would be like 60, 70 handles lower. And I was real bearish in 2008. And the gap would be 60 to 70 handles lower, and I'd start telling my readers, okay, we're going down to fill that gap down to 920. That's our target. That's where we're going. We've got a gap from 2006. We're going to fill it. And honest to God, and the market, was violent, and the market would go down to like 920, would fill the gap. Sometimes it would go down to like 910, 908, on that one day, fill the gap, and I'd say, okay, well, the gambling man, he might want to buy a few down here because we filled the gap. Honest to God, we would fill the gap. The market would trade maybe 10 handles below the gap, and the Fed would cut interest rates. And in a 24-hour period, the S&Ps would rally 60 to 70 handles. And I'd say, okay, time to get out of your longs. Now we're going to sell them again because they're not fixing anything. They're just lowering interest rates. Catch all the shorts off guard, and then we go lower again. I mean, and that's why I still do I don't do the bond and notes. I do 24-hour charts. The currencies I do 24-hour charts, but the S&Ps and even the Nasdaq and everything I still do pit session charts because I like those gaps in case the market ever really, really moves big. We can start keying on those gaps as our targets. So anyhow, this spread right here, this is the bonds, ZBH, ZNH is the notes. This spread right here will keep me bullish the bond market. And I think if the bond market's going up, the stock market's most likely going down. And I think that's the way we finish out the year. I mean, I did a very bearish webinar over the weekend for a reason. I think the stock market's going down, and I think Apple's going to lead the way. So what is old Apple doing right now? It's only up $1.70. So it was up $5-6. So if Apple turns around, this Apple, I mean, I brought this up in the webinar, and I'll bring it up again. I am a firm believer that one stock does not make a market. And this is 30-some years of a belief system that one stock does not make a market. This stock, Apple, proved me wrong all year. This stock gapped open higher on the 1st of January or the 2nd of January, and it rallied from 405. The December 30th close was 405. It rallied from 405 up to 705. It rallied $300. It rallied 75%. And the whole of the stock market jumped on Apple's back and went with it. And on September 21st, this market turned. Look at that little sell signal up there as well. That's kind of a nice one. This market turned, and the stock market turned with it. I think this is serious. And I have a funny feeling it still isn't going to surprise me today to see Apple turn around and go close on the lows of the day, maybe even lower. And if that's the case, if we take out this low here, which is 518.60, we'll go back down here. And I think there's all these gaps are here for a reason, and I think we're going to fill them. And we could fill them this year, because we all know the nature of the beast. The market goes down a lot faster than it goes up. So the way I measure things, I just measure from here to here. That was $199 break. You come back to this low. See, but this is steep, but this is steeper. And I'm beginning to think that, oh boy, this could get ugly. Are you trading the British pound as both a swing and, well, I'm thinking a swing trade is a long-term trade. Did you short more? No. I've been short, Bernice. My initial short in the British pound was at 159.37, and then I added on at 160.40 something, and I've been taking heat ever since. So, but I think I'm right, and I'm going to, and that's the position I have on. I'm not in a great amount of financial pain on the trade. Put it that way. You know, a lot of people ask me, "Where's your stop?" I said, "My stop is financial pain." You know, where's your target? My target is financial gain, and that's you know, that's probably not good advice for a newcomer, but that's the way I trade. You know, when you see a shadow trader talking of 400, 420 downside, if we break, yeah, absolutely. Possible buy point 460 if mark. The only thing I know is at $440, at $445, Apple is up 10% on the year. That's a good return in a year for any stock, 10%. So at $445 means Apple has to break another 80-some dollars from these levels here. So, you know, so anyhow, but that was one thing I was talking about. So Apple proved me wrong all year to the upside. Well, it's proven me, you know, now it's leading the market lower. And I think this is serious. And I think this is going. What do you want to know about the yen, old Gary Hewitt? Were you at my were you at the webinar? Oh no, it's not. I mean, the technician doesn't even short this market until it breaks the neckline, and that's at 120.25. The technician doesn't even short it until we get here, and he only, I mean, as the technical story goes, if the technician is, let's say he's a 10-lot trader, he sells 5 on a stop at 120.24. He looks for the market to trade off. He looks for it to trade off convincingly. If it trades off convincingly on good volume, then he'll look for a return to the neckline, and that's when he'll initiate the other 50% of his position. Not all Head and Shoulders return to the neckline, and that's something that I put out in the weekend webinar. I put up that weekly. I think it was an S&P chart. Not all of them return to the neckline. So I'm honestly thinking, we there's elections in Japan this weekend. Do you short this contract or wait till March? Well, I'm short this contract now, Michael, and I'm not sure if the currencies. I'll be checking my volumes. I guess I could check it right now. I'm pretty sure I'm pretty sure the currencies roll. This is a little thing that tells me what open interest and volume is. You see, I still have December. This is the December euro. I still have volume of 270,000 in December and 13,500 in March. So that's telling me that the volume is still in December. So December is still the lead month. And then I look at open interest. The euro currency still has 210,000, where March only has 24,000. So December is still the lead month. But if these numbers start getting closer and closer by the end of the week, the currencies roll on a Monday, and I'm not sure if they roll this Monday or the following Monday. I'm almost 100% sure they roll this Monday. But well done, Steve. I'm pretty sure they roll this Monday. So I got a guy I call on the floor of the exchange, and he tells me when they roll. So we'll have more than enough time, and even if they roll and you miss the roll, you'll still be able to get out on the Monday or the Tuesday. But what I was taught a long time ago is, we're speculators. We're not the end user. And the reason they came up with these futures markets, because 99%, and this is a fact, 99% of the volume that's done in the futures pits is purely speculation. Only 1% goes to the end user. But the end user, and that's the seller or the buyer, but the end user is so big that he needs that other 99% to make a market. If they didn't have the other 99%, the end user markets would be so wide that it would cost, like the grain manufacturer, or it would cost the general public, so much more to buy bread, because wheat would be so much more expensive for the end user or the end seller. So the buyer and the seller, the end users, the people who actually the 1%, they need the 99%, because it's the speculators, it's the market makers. They tighten up the market, and they make it okay. You understand what I'm saying? Anything Japanese central bankers can do that would strengthen their currency. Well, I mean, just being hawkish. The new government, there's the supposed new government that is coming, that is leading in the polls, has already come out and said, and that's what's knocked the yen down already the last couple of months. The new government said that they are going to run negative interest rates. They're going to knock down the currency, and they're going to stimulus. Supposedly, you go into Tokyo, and it's like, on a Saturday night, which restaurant do you want to sit in? You don't need reservations, nothing, And in all honesty, after the nuclear disaster that they had, last year, whenever that was, 18 months ago, I mean, it's not like I'm booking any trips to Tokyo anytime soon. So, yeah, absolutely, it will improve their exports. That's why. That's what the Americans did with this right here. This high here, that's June 2001, the July 2001, for until April 2008, the dollar went straight down. And what did that do? That made our exports more attractive to foreign buyers. And also, if you think about this is July 2001 to March 2008. So what does a weaker dollar? What does a weaker dollar do? Remember those dates, July 2001 to March 2008. What does a weaker dollar do? It makes, to foreign buyers, it makes this market more attractive. Where's July 2001? Where's July 2001? Right here. Here's July 2001, right in here somewhere. Right in this little area here is July 2001. That's when the dollar started going down. Where's 2008? Oh, here's March 2008, right here. Do you remember when the dollar fell hard? Well, look what gold did. Gold rallied up until then. And, and there's a lot of people out there who they're talking about the gold market. They love the gold market. They want to buy the gold market. Just so you remember, this high here is 1,033.90. So let's say 1,034. This low here is 681. So 1,034 to 681, that's 34 and 19 is 53. $353. Gold broke from the highs to the lows. Something that's 1,033, it breaks. That's 35%. Gold broke 35% from March of 08 to October of 08. If gold breaks 35% this time, that's a $600 move. Is that right? I don't know. I'm just pulling numbers out of my hat. It might even be a $700 move. Let's say if this is 2,000, yeah. If the price of gold was 2,000, 35% of that is 700. So let's say it's a $600 move. What's the high? 1923. A $600 move takes this down to 1623. And I mean I talked about this in the webinar, and I'm gonna bring it up again. I write about it all the time. John Paulson, you're only as good as your last trade, buddy. And even though he creamed the housing market in 2008, he hasn't had a winning trade since then. So what was he going to do after he lost 52% in 2011? He started a gold fund on his name. That's all he had was a name. Then he made all these billions of dollars in 2008. He started a gold fund and got long hair, and he's still long. And I think I saw this week or last week, HSBC said, he's losing his shirt again this year. On stuff outside the gold fund. So, I don't know. I've always heard you're only as good as your last trade, and his last trades have not been too good. So, okay, ZB at for support and a buy number. Is that where it is right now? Yes, it is. You know what, Dave? I made my money in the bond. I mean, you could buy it, But you know what? We bought it last night. We had our play. We had our trade on. And we made our money last night. Do we really need to I mean, this is the way I trade. I made my money in the bonds last night. I have a position on now in the Nasdaq that I'm taking 7 handles of heat on. So, I have a position in the pound that I'm taking 100 points of heat on. I have a position in the Japanese yen that's just going like, thank you very much, Tony. You just keep on selling me. But I'm more of a position, a long-term trader. Bond trade 12 times a year, and I got the trade last night, and I profited on the trade. I traded a 4 lot. I bought the lows and sold the 20. I actually sold them at 26. I didn't wait for 27. I sold them at 26. I made 32 ticks in the bonds. The bond is 31 and a quarter a tick. That's exactly $1,000. And I move on. Thank you very much. So yeah, you could. I mean, you could buy them. Do you really want to get involved this time of the day? Yeah, I mean, I don't know where you bought them, Dave. But you sold them at 24. And if you bought them at 20 or less, I'm sure. So I'm not, I'm taking heat in a Nasdaq position, and so I'm just going to take that kind of heat and keep an eye on things. That's the way I'm going to trade the rest of the day. I'm going to watch the pound. I'm going to watch the yen, I'm long this cattle. Cattle's down a little bit. I'm not long a lot, so I got offers in a little bit higher, and I still think I might be able to get out by the end of the day. I'll put up a cattle chart and show you why I bought the cattle. What I kind of bought it is, well, it doesn't matter why I bought it. I bought it because I like it, and what I'm thinking is a lot of people will start saying, "Hey, this looks like a reverse Head and Shoulders," And in all honesty, what this is telling me here, this could be yeah, I think the cattle is going to come back up here, which is 133.50. I mean, right now it's 130, so you could put another, and what the price of cattle is here right now, it's trading 130.25. What that really is, that's $1.30.25 a pound. That's how. So if you see cattle or hogs, that's $1.30 a pound. Like crude oil is 88 something. That's $88 a barrel. So when I think the hogs are trading in the 80s now. Where are the hogs trading? Yeah, the hogs are 82.65. That's 82 cents a pound. And because it's such a big contract, I'm pretty sure it's 40,000 pounds in a contract. So they could take it out to 82.65 and trade out that far to hundredths of a cent, and it's still a big move. So, um, well, here we go, 10:51. I mean, I don't know how I do it, but I keep on. I babble on. I hope no one's discouraged that I haven't thrown a lot at you. And Doris, stick around. Don't leave because I need to get your email address, okay? And or you can hold on, Doris. I'll open up a message. Doris, send me your email address, okay? And I will send you out all my stuff. Eve, I will check my stuff. Eve, did you check your spam? Was it in spam? If it wasn't in spam, I'll make sure that I get you an extra week. And my website. This is very, very. That's a good question, actually. You could go to my website and what am I trying to say? Sorry, I've lost my train of thought. You could go to my website. On the website are the intricacies of PowerPoints, and you could study the points a little bit more there. Oh, okay, Eve. Anyhow, Eve, I'll sort you out. Don't worry. Don't worry. And anyone who takes the TNT class in January, I give out the spreadsheet with well, the minute you sign up, I send you the spreadsheet with the formula embedded in the cells for the PowerPoints, and then with a couple 3 weeks to go, I'll send you all my chart work, all the big explanations for the PowerPoints. There's a lot of information, but I'm going to want you to come to class in January we're going to discuss rules. So I want you to come to class with some of the rules that you obey and a lot of the rules that you disobey. And then I want you to come to class with questions about the PowerPoints because these PowerPoints are really powerful, really powerful. So, anything else? Please refer to my 1045 question. What was it? If you knew today the Fed was going to announce QE4 this Wednesday, what trades would you focus on? Well, what does QE4 consist of? What's QE4? We know what QE3 is, don't we? QE3 was they're buying bonds. QE1 and QE2 buying bonds. QE1 and QE2 they were buying stocks. So what's QE4 going to be? Are they going to be buying bonds? Are they going to be buying stocks? Are they going to be trying to sell the dollar? I think we got to worry more about. What I think you have to do is don't worry about that. Do you know what I mean? Don't overthink. I've been working with a lady recently who is, has a huge job, makes big money, and drops big money trading this market, and she overthinks it instead of just oh, well, I can't sell the yen today because this and that. Quit thinking for a living. Just use your points, use your, and I'm not trying to dodge your question, Bernice, but let's just live for today. Your bond chart was 30-year, 10-year notes. Is that what you trade or outright bonds? I trade both. Um, Last week I sold the bonds, bought the notes. I sold the spread, and I was going to run that position into payrolls on Friday because I thought the bonds were going down, but I wanted to have a little bit of protection, and then the spread. After I sold the spread, I sold it at like 10 o'clock in the morning. By 3 o'clock in the afternoon, the spread was making me 7 ticks. And I sold a 5 lot, so that's 35 ticks on a spread. That's $1,1100. I said, you know what? I'm just going to take the $1,100 profit, and then I don't have to worry about, is the payroll number going to be good or bad. I just took a profit. I mean, that's a beautiful thing. So I usually trade the outright bonds, like I did last night, and look at the, well, you don't have the spreadsheet. I'm sorry, Eve, but I had a point at 149.18. I know I put it out in the webinar room on Saturday. I said, here's a trade. There's 466 people here in the room. Here's a trade that I have for you. You buy the bonds on Sunday night. And what do I do at 4 o'clock yesterday? I checked my points, and I realized that I have a point at 149.18. It's like, boy, that would be great if I could buy them down there. Oh my God, take, you know 8-9 ticks on a trade. I mean, that would have been a beautiful thing. And sure as can be, we opened up right there, 18s. So I don't know how many of those 466 people jumped on that trade, but I see we have 25 people here in the room, and only one of them jumped on the trade here. And you guys have been reading my stuff for a long time, so I don't think too many of those 466 people jumped on it either. But they're looking at it and saying, wow, that was kind of a nice trade. Eve, you did hear me announce that trade in the webinar on Saturday, right? Here's a trade for the whole room. Buy the bonds on Sunday night and sell them at the pivot at 149.27. I know I put it out there. So, okay. How do you determine an intraday trade versus well, Gary, I don't really trade intraday. I mean, I do. I trade the yen intraday, but that's when I'm just when I'm feeling like, okay, this yen's gonna, this yen's starting to go down now. Let's sell a few more. But at the moment, I have what I have limits on. I set position limits with my clearinghouse, and I tell them I do not want to trade over a certain limit in any contract. I do not want to have more than 10 on, or I don't want to have more than 20 on. So they will set my computer where if I have a position limit of 10, I can't sell 11. So at the moment, I am all in. I have a limit position on in the yen. I have a limit position on in the pound. So I can't sell anymore. So I won't. When do we roll over? Most likely Monday, Bill. But I'll be writing about it in my commentary this week. Don't you worry, old boy. I know you're short of them both. So, and you'll have more than enough time. If we don't roll over on Sunday, you can roll them on Monday and even Tuesday. I'm pretty sure they roll this Monday from December to March, but you'll have time. But if they for sure are rolling this Monday from December to March, and you're still short both of those, roll them on Friday. Right now, December is still the lead month. So, and it will be the lead month all week. They either roll this Monday or the coming Monday or the Monday after that. I'm almost 100% sure they roll this Monday. Any other questions? Have I answered everyone's questions? Gary Hewitt, I'm sorry, I don't mean to. How do you well, I mean, You know me. I've been short this yen for a long time, and that's a long-term trade. Intraday, intraday means you're just I mean you're selling them wherever. Let's sell them here at 120, 140, and see if we can buy them back at 37. You know, send my best to Julia, please. Any other questions, Doris? Doris, I sent you a private message. Are you there, Doris? I, I Yeah, well, in that box, if you could put your email address and until I get a hold of Morgan, yeah, and Morgan may have sent me the email already, but I will send you today's commentary and everything. And Eve, I will send you today's commentary. Everything I put out over the weekend, I'll send it to you today, and I'll give you both an extra week. So, Doris, what did you sign up for? Do you know? Oh well, she must be typing away. A quarter. Okay. So the quarter. Do you want the quarter to start today, or do you want it to start in January? Okay. So it'll be good until January, February, March, April 17th. Same with you, Eve. April 17th. I know I originally told you April 10th, but it'll be good till April 17th. So that extra week will help ease the pain a little bit. I'm sorry. I'm sorry. I mean that I rocked that webinar, and I got a ton of new signups, which was a really good thing actually. So I still have a hoarse voice from it. But all right, any other questions? Doris, you didn't send me your email address yet. Here, Doris, here's my email address. PowerPoints711 at gmail.com. Doris, email me. Put in the subject line, this is Doris. And then I'll get you added to everything, okay? Oh, she did email me. I got you now, Doris. Thank you, darling. Thank you. All right, any other questions? Oh, there you go. Another hour Monday session. I know we didn't do a lot of charts, but I think I shared a lot of good information. And I always feel that if I can share good information like that we've all won. So, all right, all. Well, I'd like to say thank you very much. Thanks, guys. Thank you. Remember, when I tell you to buy the bonds after payrolls, buy them. Don't make me come out there. Roger, you're close. I could have your legs broken. I just drive down the road. Cheers. Thanks. Yeah, Carol. Yeah, I may need to borrow your Louisville. Well done, Bill. I'm glad you bought those bonds. That was your trade, Sita. I advertised you in the webinar, Sita. Cheers, all. Thanks for coming. See you next Monday. Thank you.